Hello and welcome to a fresh new edition of Captains of the Capital Markets. With me today is Tarun Kataria, CEO at Religare Capital Markets India. Tarun, great to have you here on the show with us. Thanks so much.
Thanks.
Hi. Let me start by asking you, how are you finding your new role? What have you been up to? It's been a while since we've caught up.
Yeah, it's been, almost 10 weeks on the job. Probably the most exciting, most hardworking 10 weeks I've had in a long time. As we build out what will be, we hope, India's first global emerging markets investment bank, we need to put a lot of the architecture in place, buy companies around the world to create global institutional distribution, obviously bring quality bankers on board, bring quality salespeople on board. All of that stuff is happening in such a rush that, days are long and nights are long, and, we've actually made a lot of progress in the last 10 weeks. So hopefully if we can keep that momentum going.
Right. So, what does your job entail? Just run us through that first. How do you sort of build on this thing now?
Yeah, there are 3 or 4 facets to it. Obviously, one needs to build a team, right? So you're building a research team, which is largely done. We've got a phenomenal, in fact, most people would suggest the best research team in India with 5 institutional investor-rated analysts. The issue is we need to now populate our sales business with at least 4 or 5 or 6 more sales guys, because if you've got a good research product, how do you sort of pump it through the pipe? And that sort of pipe is being built out as we speak. So really it's building out the business is one plank of it. At the same time, obviously, to make sure that the architecture of an equity business, the architecture of an investment banking business is also being bedded down. Right. That's just in the context of India. Now, if we want to be India's first global emerging markets investment bank, we need to inorganically grow globally. Right. So we've made 3 acquisitions. We've bought Aviate, that gives us 120 empanelments in Asia. It's a Hong Kong, Singapore based business. We've bought BJM's North America and European businesses that give us 170 empanelments in North America and Europe.
So expanding globally as well.
So now if I've got global distribution, I need to buy companies in Sri Lanka, which we've done. I need to set up businesses, or we need to set up businesses in Indonesia, South Africa, Brazil. So you pump through that channel emerging market product, and that's the model that we're going to create.
And it's a great time to be in this business, one would say?
It is a great time because...
at least capital markets, equity markets are looking very strong. Actually, most asset markets are looking strong here in India. Domestic growth is quite strong. And you've got a situation where a lot of the foreign money is also finding its way to this country because probably opportunities are scarce outside.
Yeah, foreign money coming in, so there's that flow, and obviously foreign money looking for Indian assets, for Sri Lankan assets, for Indonesian assets. So our ability as one firm, Religare Capital Markets, to give company X sitting in North America with 2 trillion of assets, product from around the emerging world, is our competitive advantage. How many people are able to give them Indonesian equities or Sri Lankan equities besides Indian equities?
It almost seems unbelievable. Everything is hunky-dory. Suddenly it at least looks like a hunky-dory. A lot of people say it's optical. Yeah. There's a lot of printing of US dollars going on. That's pushing up asset prices across the world. Now the bubble in the making. Let me get that out of the way first.
Yeah, I think there's a disconnect, might be a strong word, but obviously the equity markets have rallied far ahead of what G3 macroeconomics would suggest. But that's the value of liquidity, right? So really, I think the underlying story here is you need to recreate wealth in some of these geographies so that the consumer starts spending again. So if you believe that 2/3 of US GDP, for example, is about consumer spending, unless the fear of your job loss disappears, the wealth effect happens.
That's the hope, but it doesn't seem to be.
It is starting. And I think literally in the very last week or so, the numbers in the US are starting to look a little bit better. Now let's hope that's a sign of stuff that will continue over the next weeks and months. But that's really what liquidity does. It creates wealth, and based off the wealth effect, you both start spending, which then drives macro, at least in the US.
Right.
But listen, let's not forget it's a bipolar world, right? You've got the G3 markets that suffer from low growth, low productivity, sort of the demographic dividend fast in the 60s. On the other side, you've got the emerging world where it's got all the right sort of demographic characteristics, high savings rate, high growth. So naturally you'll see that flow of capital into that.
There are two parts to it. One is liquidity and the flow of capital. That might depend on various things. The other part is, can India grow and outperform in an otherwise generally slowing world? That's the question.
I think it can, right? Because it's not like it's China where 35 or 40% of your economy is export driven. So any slowdown in Japan, any slowdown in Europe, any slowdown in North America can actually cause your GDP to contract substantially. In India, I don't know, 17% of the economy is export driven. You've got this massively growing consumer class. So if the world stays in this slow growth mode, I'm still comfortable India can grow at 8%. I mean, the question to debate is, can it sustainably grow at 10%, or let's call it double digits for a minute? That, to me, is debatable.
Okay. We focus on U.S. so much, the developed market so much, economy so much. But the point, as somebody put it, is if the U.S. stays in a low growth phase, it doesn't, another shoe doesn't drop, but then it generally stays in a low rate of growth.
Yeah.
It might actually be good for countries like India from a portfolio flow perspective, from India being discovered much more as an investment destination, because, as you said, liquidity is abundant and it's got to find a home.
Yeah, I mean, I think the good news is India's got discovered, right? In the last 12 months, suddenly people have figured out...
It's not a new market anymore.
It's not a new market. It's, as Obama said, it's an emerged market. Now, you can debate that. But yes, people have figured out India. As I say, how do you put down 1.2 billion people, of which the spending class is growing by, I reckon, tens of millions every year. The stuff that money is being pumped into rural India